The smartest creatures, as far as you know, on this earth are humans, is our defining characteristic.
Yes.
We're obviously weaker than, say, chimpanzees and less agile, but we are smarter. So now what happens when something vastly smarter than the smartest person comes along in silicon form? It's very difficult to predict what will happen in that circumstance. It's called the singularity. It's a singularity like a black hole, because
Yes.
you don't know what happens after that. It's hard to predict. So I think we should be cautious with AI, and I think there should be some government oversight because it's a danger to the public. And so when you have things that are a danger to the public, like let's say, so food and drugs. That's why we have the Food and Drug Administration
Right.
and the Federal Aviation Administration, the FCC.
The one thing that makes humans the most intelligent animals on Earth, in our opinion, is our intelligence. Though we are not as nimble or physically strong as, example, chimpanzees, we are nonetheless more intelligent. So what happens when something in silicon form that is orders of magnitude smarter than the smartest individual appears? It's really hard to guess what will happen under those conditions, because it's difficult to anticipate what would happen after that moment. This situation is sometimes referred to as the singularity, much like a black hole. I think there should be some government monitoring of AI, and that we should use caution while using it. It puts the public in danger, and when something puts the public in danger, we have regulatory agencies like the Federal Communications Commission, FCC, for communications, the Federal Aviation Administration, FAA, for aviation, and the Food and Drug Administration, FDA, for food and medications. You've come to the correct spot if you're determined to keep ahead in the quick-paced world of tech investments, particularly with Tesla. We'll examine the factors driving the most recent spike in Tesla's stock price in today's video. We'll look at innovative AI advancements, fresh market initiatives, and the critical elements that could drive Tesla's stock price even higher. Please hit the like button if you enjoy our article before we go more into Tesla's financial maelstrom and prospects. We are inspired to continue providing you with the most enlightening and current financial information by your support. Remember to hit the bell button and subscribe to our channel as well to ensure that you never miss any updates from Tesla stock news. We're dissecting everything today, from Tesla's stellar stock performance to the calculated actions that might spur even more expansion. We'll talk about how Tesla's cutting-edge initiatives, like its AI developments and robotic taxis, are influencing the company's financial environment. We'll also discuss several professional forecasts and analysis that indicate Tesla's ascent is still very much ongoing. Now let's get going. With an astounding 41% increase, Tesla's stock has celebrated 10 straight days of gains. The company has been on an extraordinary upward trajectory. There are a number of important reasons for this increase. First off, in order to successfully satisfy demand and guarantee that fewer cars remain unsold in stocks, Tesla has increased both car manufacturing and delivery. Second, investor confidence is increased by the increasing optimism in the energy industry, which Tesla is substantially involved in. Technically speaking, research indicates that Tesla's stock has strong support at $230, even though previous indicators, such as the daily RSI approaching 90, suggested that the company might have been overpriced. This implies that even in the event of a decline, the stock price may not drop below this level. Stocks like Tesla are often assessed by investors based on their potential for future growth and profits. Tesla has the ability to grow significantly, which makes it a tempting investment even though it is now priced at high multiples of anticipated earnings. These assessments rely on the general market dynamics and anticipated rates of growth in earnings in the future. Many experts are still bullish about Tesla's prospects as a stock going forward, despite continuous worries about overvaluation. They think that Tesla's stock may rise even more, perhaps hitting $300 or $400 in the near future. Technical analysis tools like Fibonacci retracements, which many traders employ to identify points of resistance or support within a market trend, provide support for this optimism in addition to mere conjecture. It's not a given that these high stock price goals will be met, though. Tesla needs to keep pushing improvements in its financial health, especially in areas like revenue growth and profit margins, if it is to reach and maintain these higher levels. In this sense, Tesla's capacity for innovation and effective production scaling will be vital. To maintain its competitive edge in the energy and electric car industries, the business must also efficiently manage its operating expenses while keeping up its R&D spending. Because of Tesla's relentless innovation and ambitious expansion tactics in the electric vehicle and renewable energy areas, the market perception toward the firm is still favorable overall. Tesla's quarterly financial performance and any announcements regarding new models, technological improvements, or expansion into new markets are widely watched by investors and market observers. Tesla's future and those of its stakeholders appear bright if it can sustain its current momentum and outperform the market. The course of Tesla's stock and the company's continued leadership in global technical growth may be decided in the coming years. Tesla's stock has rallied due in large part to the market's perception of the company as an undervalued asset, especially given its importance in the energy industry and its artificial intelligence capabilities. There's a gamma squeeze going on where buyers of put options and buyers of option contracts are quickly liquidating their positions, pushing up the price of Tesla's stock. This is a reflection of the market's realization of Tesla's AI potential and the company's persistent story in the energy industry, which keeps investors interested. Nonetheless, investors are advised to trade Tesla's stock with caution and humility despite the favorable momentum. It's critical to learn from prior mistakes, which can result in large financial losses, such using excessive margin or selling calls hastily. It is advised of investors to have a long-term outlook and avoid taking needless risks that can endanger their ability to make money. It's strongly advised that anyone thinking about buying Tesla stock adopt a long-term investing approach. Experts advise concentrating on an investing horizon of 10 to 20 years. Furthermore, there is currently a noticeable imbalance between buyers and sellers, and major institutional trading volume is still below historical levels. This implies that even while there is a lot of interest in Tesla, the market hasn't completely steadied. Therefore, individuals wishing to invest in Tesla would be better off taking a cautious long-term approach. Organizations are reassessing businesses more frequently based on how much artificial intelligence is used and integrated into their operations. Institutions' perception of companies' long-term value is being altered by a growing trend in which they are actively integrating AI models into their business strategy. A cautious approach to this new technological development is indicated by worries about how these AI projects may impact stock movements and the advice given on managing investment margins. It is crucial to collaborate with someone you can trust while making financial decisions. This cannot be stressed. Relying exclusively on online resources for financial guidance carries a considerable risk. Seeking out and utilizing the experience of seasoned financial sector pros is advised instead. These people are able to offer well-informed, individualized guidance that considerably lowers the possibility of financial errors. Investors are confident in the long-term prospects of corporations, particularly those that are successfully utilizing emerging technology, such as artificial intelligence. A company's leadership and execution skills are equally as important as its present financial standing or market performance when determining whether or not to believe in its future. Strong leadership and the capacity to carry out plans efficiently are essential elements that highlight a business's potential for long-term success. Many conversations concerning the factors driving this remarkable success have been triggered by the recent spike in Tesla's stock price. One of the main areas of conjecture is how AI will affect Tesla's expansion. Many people think that Tesla's AI developments have played a big role in the stock's increase. A lot of attention has also been paid to Tesla's future innovations and how they may affect the company's earnings and position in the market. Analysts and investors alike are intently observing how these variables interact to impact Tesla's stock price and financial standing. When it comes to investing tactics, the recommendation is to participate as soon as possible during a bull market. Realizing the long-term potential of forward-thinking businesses like Amazon and Nvidia can result in significant profits. Previous investment cycles have taught us an important lesson. Selling equities too soon based only on short-term fundamentals can lead to lost opportunities. Better financial outcomes might instead come from comprehending and taking advantage of these organizations' long-term growth prospects. There's a growing consensus on Tesla's AI capabilities. These technologies are currently incredibly undervalued, and they have the ability to completely change the way we live. Many people are unaware of the sophisticated features and far-reaching consequences of Tesla's full self-driving FSD technology. This idea has the potential to completely transform urban planning and transportation infrastructure, not just how we drive. The way cities are designed and constructed is probably going to undergo significant changes as Tesla continues to improve and hone its FSD technology. For example, when efficient and dependable autonomous driving reduces the number of personal vehicles on the road, parking lot space may be reduced, allowing more room for green areas or pedestrian zones. This change may also encourage the creation of intelligent traffic control systems, which would ease traffic and enhance air quality. Furthermore, incorporating FSD technology may significantly alter people's commuting habits, possibly easing the burden of long commutes and altering the idea of living far from one's place of employment. The knock-on effects will affect many facets of daily life, ranging from lowering travel times and expenses to raising environmental sustainability and safety. The continuous development of Tesla's AI and FSD technologies promises to usher in a new era of modern living and mobility by promoting not only a wider urban and social transformation, but also improving the functionality of automobiles. With the increasing development of these technologies and the expansion of their applications, there is a greater chance of major societal changes, which puts Tesla at the forefront of this futuristic environment. The sentiment surrounding the movement of Tesla's stock is very nuanced. Tesla has seen a decrease in value, even though the company has made record profits. External economic factors, like rising interest rates, which impact overall affordability and investor sentiment toward the stock, are primarily to blame for this counterintuitive movement. In terms of the future, the market is giddy with excitement about Tesla's upcoming projects, such as the Optimus project and robot taxis. However, there are a number of unknowns when predicting whether these endeavors will succeed. These include the launch schedule, the production ramp-up schedule, the intricacies of their business models, unit economics, and any regulatory obstacles. Predictions are optimistic despite these uncertainties, suggesting that Tesla's stock could rise by 45% to 50% during the next 18 months. This implies that Tesla is still a great long-term investment option, especially if it handles these new endeavors with success. All right, that wraps up our deep dive into Tesla's current stock movements, future ventures, and the influential voices shaping public perception. To summarize, Tesla's stock is experiencing a blend of highs and lows, influenced by external factors like interest rates, despite record profits. Looking forward, Tesla is gearing up for exciting new projects like robotaxis and the Optimus robot, which, despite facing uncertainties related to production and regulation, hold significant growth potential. Now, I've got a few questions for you. What are your thoughts on Tesla's new ventures like robotaxis and Optimus? How do you think changes in interest rates will continue to affect Tesla's stock performance? Don't forget to like this video if you found it informative and subscribe to Tesla Stock News for more updates and discussions just like this one. Your support helps us keep you equipped with the latest Tesla insights and stock trends. Thanks for watching, and we'll see you in the next one. This version should be more readable and grammatically correct while preserving the original meaning and information.